Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content. It is Thursday, May 26th, 6:34 a.m. as I'm starting the video. And as always, run your player at 1.5x. Pretty quiet morning on futures. I got Bitcoin down 1% and oil up 1%. Pretty much flat on the equities. Didn't really see a whole lot happening in the rest of the futures list that I got going. Macro, we got GDP this morning, jobless claims, pending home sales, nat gas inventories at 10:30, and then a 7-year bond auction at 1 p.m. Over on the earnings front, we've got Baba and Baidu. We've got the dollar stores, Dollar Tree and Dollar General, and Burlington and retail. After the earnings, Costco, that'll be a big one. Zscaler, Autodesk, Dell, and Workday, which is one we don't really hear about too much anymore. Anyways, got some developments in the oscillators I want to share with you to start the morning today. Here we are on the NYSE. We had bottomed out in this minus 60 area. We have come up and made a big push yesterday up into that 48 area. So we're working our way up towards that positive 60 area, which is going to be our yellow flag type area. Where we got to watch for overbought conditions. You can see back in the past that 60 has really capped a lot of the upside action on the oscillators, so we got to be wary of that. But the good news is it's heading in the right direction since we've been long in recent days, not without a lot of volatility, mind you. There's been some brutal whipsaws, so we'll see if the market can follow through today with a green day. One thing I forgot to mention on the earnings, of course, we had NVIDIA last night. That'll be a good intraday trading opportunity if that's your kind of thing. If not, I think it's down about $10, maybe a little more. But then it'll set up as a bracket trade tomorrow after the intraday vol today works its way out of the system, and then you'll have a real good second day play tomorrow and into next week. So keep that one on your radar. And then by extension, the SMH, which we'll get into later today or later this morning on the video. Wanted to go over the new highs and new lows. This is something where since this regime change at the beginning of the year, you can see that getting up here towards the zero line has really capped the upside activity in new highs minus new lows, and we were like at we're at minus 35. So we're getting up towards the upper end of that range as well. Now that doesn't mean we can't extend this rally, but we got to be just cognizant of where we're at. Nasdaq's been lagging a little bit. We're down here at 26. Really not a actionable, not as close to an actionable level as the NYSE. And then as we move on to new highs minus new lows on the NASDAQ, you can see we're not really threatening to get up to the zero line. So we'll see if the NASDAQ can catch up, or it's just, that's where a lot of the selling has been focused. So it's not a shocker to see the NASDAQ lagging to a certain extent compared to the NYSE and the small caps. So moving on to the SPY. Nice development yesterday. We, if you remember, had a gap between 395 and 397. We filled that and made a run towards 400, which got rejected at the end of the day. So additionally, we broke out of this little wedge. So really, just speaking in round numbers, we'll get to the 60-minute in a second, but crack above this 399, 400, then your next big level is 405, and that is where we not only have technical resistance, but we've got the declining 20 EMA here, which will act as another layer of resistance. And then after that, we've got 410. So just speaking broadly in round term figures, 400, 405, and then 410 on your upside targets on the daily chart. But this bodes really well. We'll see if we can get some follow through. But when you've got a bullish falling wedge and you break out of that, I mean, that's your buy signal. Now it all depends on follow through. Moving on to the 60-minute chart, you can see that we took out this little baby downtrend line as well on the 60, so that's a good sign. We had the gap was right in here, and you can see that we went up for a touch near 400 and then got knocked back to more or less 397.50. 397.37 at the close. So today, I would not want to see 395 get taken out to the downside. That would be a disappointment. And as we just talked about, on the upside, really want to take out 400 and then make a run towards this 405 area. And then we've got a gap to fill between 406 and 411. That would be a real nice technical type event to see play out. Not just because we're long, but from a technical perspective, what the market often likes to do is run up and fill gaps before reversing, kind of give it a technical check mark. Now the thing is that we've also got a gap way up here, and that remains unfilled. Now, one scenario is, come up and fill this gap. I'm sure we would have a hesitation between this 411 and 415, but if we were to break 415, then you could see some real fireworks. I mean, that's pretty far up there. We just mentioned that the oscillators are getting extended. Might be beyond the realm of possibility of filling this gap on this particular run. But what I could see is a move up to this 411, say by the weekend, say by the end of business on Friday. And then, a hesitation to burn off some of the overbought conditions and then make a push. And I guarantee you nobody has this on the radar as far as a bounce goes. And that I would say less than 50% chance that we could make it that far. But if we, like I say, if we were to take out 415, then all bets are off, and we could certainly flash up there to make that fill. QQQ daily up 1.4%. Not all bad. You can see here, though, that we have yet to take out the 8-day exponential moving average on the daily chart here. And I would just characterize this on the daily chart as, trying to form a base and make a move. So, we got to take out the 8-day and then move up towards this 298, 300 area to kind of really get things going in the Qs. One bit of good news, we broke out of this 60-minute downtrend line that I have right here, and we were able to fill this gap up to 393. You can see here, I've obviously taken it off the chart because it got filled yesterday, but that was a good technical target to achieve yesterday. So now it's all about breaking out above 393, which would open the door towards that 297.50, 298 area. And then above that, we've got a gap to fill from 302.50 to 306. We'll see if we can get that done. As far as the indicators go, breaking above 50 is always a good thing if you're long, and PPO is certainly heading in the right direction. What we'd want to see now is getting the PPO to break above the zero line, get into its bullish regime, and then get some follow through to the upside. So Qs are lagging, but breaking out of this falling wedge is a positive technical development. IWM, good day, up 1.8%. You can see here I've got this little triangle formation happening. We've got a series of higher lows here, but we still need to take out 180 on the daily chart. You can see that the 20-day is declining, coming right in there at the 180 mark. That will be a challenge to get through, and then we could see some good upside activity if we were to break out of this downtrend line right here that comes in about 181-ish, right in that area. So hopefully the small caps can generate a little horsepower today and tomorrow and break through that level. Here we see on the 60-minute chart, we broke out of this downtrend line that we had, and here is that uptrend line that we've got off of the recent low coming up this way. So that breakout is definitely positive. We had a gap to fill, and we accomplished that yesterday. Hopefully you had those gaps alarmed, and if you didn't get long down in here, you certainly had an opportunity to participate in those gap fills, if you were aware, if that's something you wanted to do, if you had your alarm set, etc. So now 179 is your level to watch today on a breakout, and then we've got a gap to fill up here to between 181.25 and 183. And I think that's well within the realm of possibility. Come up here, fill that gap, and then there'll be a real decision here at 183. We had a prior high where it got rejected right there, and we had some support back here. We had a low here. So 183 is going to be a really important line to watch. And if we were to break that, I see a pretty clear path towards this high volume overpriced bar here, which comes in around 187, 187.50. So that would be a good upside target if we were to take out 183. Moving on to Fatman, we had the big gap down the other day on that snap disaster. We did enter the gap. So now you can be long against 183.68. And then if you alarm that, if and when this rally fails, I mean, it might fail today or whenever, if price were to come up and then come back down and lose the bottom of the gap, then that's your green light for an objective short against the bottom of the gap, and then your first target will be the bottom of the prior trading range down here at 176, let's call it. So that's going to be an important line to hold on any kind of follow through type move to the upside. Now, I do want to point out on this gap, unlike a lot of other gaps that you may encounter in your work or your trading, we do have some intermediate resistance levels inside the gap. So it's not going to be, I wouldn't think, just clear sailing, flash up to the top of the gap and you got your $13 here in, a day and a half. You got a big low here coming in at around 187. That could pose some problems. You've got a big cluster of lows here coming in at 190. That could pose a problem where this downtrend line intersects. So you've got a double layer of resistance. And then if it were to clear that, then you get the move up to fill the gap at 196. So I would certainly rather be long here than short Facebook. Just realize there are some intermediate levels of resistance inside the gap. So make sure you got a little time on your position and don't get thoroughly frustrated and give up on the trade if it hesitates at either of these two levels. As long as it's making progress in your direction, you'll be fine, and certainly have your stop in place just below this bottom of the gap here at 183.68. Apple's been fairly frustrating to me. I'm long. I'm still long. I'm not going to say it cratered overnight, but we had made some, decent progress up here. Came up to touch the gap yesterday at 142 and then promptly failed, and then overnight dropped back down. I think it's trading 139 and change or something like that. So it's down a little bit, maybe on NVIDIA, who knows why. but really not getting the upside follow-through that I had hoped for. I'm out in next week calls, so really 140 is your pivot in my mind. If it, this morning here at 139 or 138, wherever it opens, if it can come up to get above 140 and the Qs are acting well, I'd like to think that Apple can at least close this gap and, get up to this 144 area on the chart. Tesla had a good day yesterday, up 5%. I don't think it quite filled this gap, but it made a good run at it. So I think 675 would be your first target to get that fill, and then 654 is the bottom of the range. So if there's a little weakness this morning and price comes back in to 650-ish and holds, then you've got an objective long, if the market looks good, to get long at 650 and see if you can get to first 675, but then 700 as your second target. I would be really, really cautious if we lost this 645, because then that would open the door back down to these lows at 620. Microsoft has been acting better. A lot of congestion here at this 261 line, and then we got a good push in the afternoon where it tagged this gap, made a little run into the gap, but it failed. The market didn't follow through in that last half hour, and so it fell back a little bit. So your objective level today is, number one, if you got a breakout above 264, I think you can get a solid $2 on the gap fill. And then with any luck, if all the stars align and the Qs look strong, make a move higher, and then I think you got some running room above 266, 266 and a half type area for a run. I would be really disappointed and probably exit my long if it loses 261. After all this consolidation below, that should really hold. And if you're interested in the name and there's morning weakness that brings price into this 260, 261 area, I think that would be a nice objective long for you. Into all this support, and then see if you can get a push higher up towards 264, 266. And if and when this rally fails, if it's, sometime soon, I'm not hoping for that, obviously, but if it does, I think you got a nice short right in this same area, because like we say, once you break out of a zone, you do not want to re-enter that zone. So if we, make a fake head fake, if this is a head fake breakout, bull trap, and we come back below 260, I think you got an objective short down to 254, because if this thing fails, I think it's going to come right back to 254, where there was all this support, and you've got this trading range, this $6, $7 trading range, where your target would be the bottom of the box. And also note, what gives me a little bit of confidence that it will hold now that we've broken out is this large volume over price bar here. You can see that there's been a lot of traffic between 261 and 259, and so that should be a really good level to shoot against on the long side. Amazon filled its gap right here at 2151 is your kind of your go, no-go line. You get a breakout above 2151. I think you back to the free 50 club, get a run up to 2200, and then a breakout there. I think that brings this gap certainly into play up towards, well, you got an entry here at 2250 and then 2300. So really $50 increments. Breakout above 251, get you to 2200, and then 2250, and then 2300. Also, it's not a lot, but RSI broke above 50. Momentum heading in the right direction, and a breakout from this 60-minute downtrend line are all positive technical developments. So it's all a matter of follow through right now. Google really didn't do much yesterday. I mean, flat. You can see price is really thinking about this gap, which makes it more important. 2125 is your gap entry. So you get a pop here. You got basically $100 of gap fill to work on. And unlike Facebook that we just went over with all this intermediate resistance because of the chart pattern, you don't really have that here in Google. It doesn't really come in until 2200, where you got this prior low and a little support in this area. So you've more or less got a $75 free run, if you will, from 2125 up to 2200 before you would really encounter any technical resistance. And at that point, you should have a nice winning trade if you get that that move into resistance. Netflix had a good day, up 4%. This scaling is so compressed that it doesn't look like it really did anything, but it did. Up 4% off of this low. So now we're back to that 187.50 pivot point, and you can see a breakout above here would probably result in a pretty nice move. Why? Because resistance, 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 support, support, support all the way back in here. So I suppose what I could do is, make this line a little thicker to show its importance, because you get a breakout above all this resistance, you could get a really nice move. So I'm putting that one a little higher up on my watch list, because that line has really grown in importance over all this period of trading and consolidation. If the Qs look good and you get that breakout, that could be a really, really productive move. Semis filled the gap. Good technical development. Broke out of this consolidation triangle. I think your pivot point now is 230. Now, of course, NVIDIA has a big weighting in the SMH. I wouldn't be surprised if it doesn't trade down this morning. And if you got an entry into 227, I think that would be a good level to take a shot on the long side. And if I were trading this, I would certainly have NVIDIA right, the chart right next to this one, because if NVIDIA opens down and then everybody decides that, hey, this is overdone, it was whatever, really a good report, and they start buying it up, you're going to see that in SMH. So I think that would be a good secondary read on semiconductors if NVIDIA is heading in the right direction. And of course, if everybody decides that it was a junk report and they just take it lower right out of the gate, I'd be a little cautious on getting long SMH with NVIDIA tanking. So I think the important level is going to be 227. You break 227, you're probably going to come down to this support area and trend line around, let's call it 225-ish, maybe even a little lower, 224, right in here. But that'll be a game time decision, really, as they all are. But if they're buying up NVIDIA or selling it off, I think that's going to have a big bearing on the semiconductor sector. So let's do a quick recap. We're doing good on time. Things are heading in the right direction into month end. Remember, in the earlier blog post, we made mention of the month end buying that's supposed to be occurring. I can only assume that it is 5 to 6 billion a day on average, institutional support. And as we move towards month end rebalancing, I also wanted to make mention, and I believe this is on the blog site as well, that ETF, the momentum ETF, the symbol M as in Mary, TUM, momentum. The momentum ETF is doing a big rebalancing. What does that mean? Well, they only do, I believe they're on a semi-annual rebalance. So the last one that they did was 6 months ago. And so now, what things have been trending up? The big one is energy, right? Energy has been on a roll. Oil has been strong, actually threatening to break out. I think I'll include that on the blog site this morning. I think 111 is your level. We're trading slightly above that now, and that keeps the door open to a flash move back up towards the highs. But my point is, on this momentum rebalancing, the things that have momentum now have literally never been in that ETF, and those are the energy names. So they're going to be buying, they're going to be dumping tech, and they're going to be buying energy. And if you think about it, if you rotate out of almost any kind of large cap type tech name, it's like opening a fire hose into a thimble, because the market cap of these energy names is so tiny compared to these positions that these ETFs and institutions have in the larger cap names, you take a 3% position out of momentum and you try to cram it into a relatively small universe of names in energy, you could see some outsized moves that don't have anything to do with oil here on this momentum rebalancing. So energy has been working on its own. I think there's the potential of this momentum rebalance to give it a little booster shot into next week. I think month end is, Wednesday of next week. I don't know if they do that at 3:59 on the last day of the month, or they work into those names. I tend to think it's at right at the very end, the last hour of trading of the month, right before the rebalance. So keep that in the back of your head, and you may want to do some research on your own of what people think they're going to be rotating out of, and I know they're going to be rotating into energy, but that may be a good thing to keep in your back pocket as we head towards month end. But we got GDP this morning. The other thing I want to remind you of is the oscillators, especially on the New York, flashing towards that 60 level. It may extend for the simple fact that the NAMO is not at 60. A real yellow flag is when they both get there at the same time, and then they both can come off. But if the NASDAQ catches a bid, you may see the NIMO pop through 60. So we definitely have to have our antenna up. This has been a crazy, volatile market. Keep a tight leash on things. If you're in your longs and they're working, just ratchet up your stops. So protect those gains. Make sure you go to the bank as your positions go in the money, and don't be caught unawares, because things can happen fast, and we've got to be ready to pivot if we get an inkling that this thing is failing and blah 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 blah. So keep your head on a swivel. Don't get too far out over your skis. I'm still relatively encouraged by what I see as far as upside potential. I don't think people are ready for it. There's been a lot of put buying, disaster trades that I think as we move higher, our wish and our hope is the shorts panic and cover, as they get squeezed out, and then that'll act as a booster to whatever buying is going on out there as far as longs wanting to participate as it becomes apparent that we're going higher. If the shorts cover, then that's artificial buying. They got to cover their positions, so that may be helpful to our cause in being long. So let's wrap it up there. If you're new to the channel, thank you so much for spending the time with me. Hit that subscribe button, hit the alarm bell, hit the like button, leave me a comment, and importantly, jump over to the show notes, find the link where you can add your email. It takes 15 seconds. Then you'll get all my content morning, noon, or night on anything that I see in the markets. I'll do my best to keep you abreast of what I see, and hopefully that'll help you put on some very objective trades that work out. So let's leave it there. Have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.